Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day all. Ira Epstein with your metals market update for this Tuesday, the 7th of November, 2017, about 1:55 p.m. Central Daylight Time. So we had a day where we saw some dollar gains, losses in a number of currencies, nothing that was stellar, but losses. And the metal markets, which rallied into resistance areas today, pulled back from that. The one market that got hit pretty hard was the copper market. And maybe that's telling us that China's news that's due out on Thursday and so on about their growth in their economy is not going to be as stellar as maybe we thought it was going to be. I simply don't know. When I take a look at gold, it is still on a weekly chart of closes under the 18-week moving average of closes in red. That number's 1283.90. Therefore, the bias is down. If you study the peaks in the valleys in the market, just on a closing basis, called an area chart, well, you've got the pattern of bearishness with lower highs, lower lows, until you get over that 1300 level. When we go to the daily area chart of closes, we went into an upthrust when yesterday the market, after settling with one of the lowest closes it had, went through all that and back up to challenge in fact, let's get there, to challenge the 18-day moving average of closes. Hit it, went through it, closed right under it, and today you're getting a $5 pullback. Now, what happens if you close over it now, the 1281 level? The upthrust stays intact and market could turn upwards. So this sideways action is getting very important to both the bulls and the bears in it. Why? And let's go through the chart. First off, with today's action, you now have lower highs. You already had a lower low. Nobody knows where this current break is going to end up. Is it going under 1265.90? Will the market go back over 1283.90 from here? I don't know. What I do know is if it goes over 1283.90, it will trigger a pattern called higher lows and higher highs. Suddenly the market turns friendly. What about resistance points on it? The 18-day average at 1281 is now, if you will, coming right on to the 100-day average at 1280.50. We might be getting what's called a bearish crossover. That's when the 18 goes under the 100. If the market gets over 1283.90, the question is, did it make that crossover? Does it just, what I do call kiss it, and it turns back up? Let's assume that you don't get over 1283.90 and you stay this way. The bears are going to get emboldened. They're going to feel stronger, at least I would, because you're failing against key resistance points. If the market goes down, one potential number is 1261.60. If the market decides to get through that 1283.90, you might be headed back towards that the 1300 zone. Momentum in the market isn't telling me a story. It picked up, and all of a sudden, you see the red line? It's flattening out. So I think we're at a key point on the metal chart, on this chart, a very, very important point in time. The gold-silver ratio yesterday looked a heck of a lot better when it got to 74.36 than it does, gaining back dramatically, whereas that means gold's gaining on silver. The lower the number is, the fewer ounces of silver you'd have to have in your push cart to go to your local perfect store where there's no markup, and 74.36 ounces of silver will get me an ounce of gold. Today, darn it, I missed that blue light special. It's at 75.33. You see on the silver market the same battle, or do you? No, it's not the same. The gold's got the highlights pointing down. The silver market has higher lows, higher highs, but the market is settling under the 18-day average and towards the 100. Momentum-wise, it's trying to it's stalled, and the question is, does it pull down from here, or what does it do? The silver chart turns back to bullish on a close over the 18-day average at 1703. In the copper market, you're in a downtrend that hit a downside target and got itself oversold all at one time. I don't think you disagree. You've got lower highs, now lower lows. Prior to this, you had a lower low and lower highs. Then for a moment, right here, we set up a higher low and lower highs. See that? And today you went right back into the downtrend, but that 307.70 level, if you look at the low, 308.30, you got very close to it and you found some footing. Doesn't mean it can't go down to that number. It's still in the bear camp until you take out 317.30, and from here that's almost what, 8.5 cents? That's an awful big risk. It's $2,000 on a futures contract in a market that's now oversold, but it's not looking pretty. The platinum market came down, and it's fighting its battle, if you will, on, well, this is the April platinum of 18, and I want the January, so I'm going to have to switch this to myself. I've just got rid of one of the contracts, but doesn't matter the contract. Higher lows, higher highs under the 18-day average of closes. So that the swing line is up, the bias is down, and momentum, which was pointing up just yesterday and looking quite good, gave it up today. Is this a one-day stall and the trend grabs hold again or not? Also notice that on the April platinum, and it is of the year 218, but it's still a popular contract, all the sideways action that's taking place. In the palladium, this is the most bullish looking of the charts in that it's got higher lows. Now, if we come to this high here, let's go to yesterday's high, 995.15. Got it? The prior high to that was right here, 995.15. Then it falls to 990.80, 995.15. We got a double top. So that doesn't mean you got lower highs. You got equal highs. So you got higher lows, higher highs. You're over the 18-day average, so the bias is up, but you are very overbought. So that's what you're dealing with. Take out 979.15, and what could happen is the market might decide to pull back to the 18-day average to regroup. But right now, the bulls, in my opinion, still control the market. In the dollar index, good action today. And now that we're at this hour, you got to get through a little more to know where the settlement's going to be, but you've got the higher lows. Today is an outside day up. What does that mean? It means you took out the previous day's low and high, and at this point, you're higher on the day. I didn't say it closed higher yet. This is where the market is. What else happened? If we take a look at the slow stochastic, which is made up of two numbers, the red and the blue, the K and the D, both numbers today are over 80, right? Yesterday, which was Monday, both over 80, and the day before, both over 80. So unless a late day break occurs, you have what's called a conversion from being overbought to locking in a bull trend. If it follows through, the potential is the upper Bollinger Band, at least one of the potential points. If it gives itself up with the red line instantly getting back under 80, 9,400 becomes a potential target. But there's one constant. This market's been staying over the 18-day average a long time. The dollar has an upside bias. That's how I would rate what's going on there. Now, I often use sources to figure out in currencies, meats, metals, it doesn't matter. What are the seasonalities? In other words, is there a time of the year when something happens over another time of the year? And one of the sources I use for that is called Moore Research Center, and I've been using them for decades, not 10 years, not a couple of years. I don't know when my subscription began, but it's that long ago. I've learned to use it over the years, and when you go back at past data, and that's what they're masters at, looking at past data and events that occurred on certain times off that past data, they've created interactive charts. So you get to go back and look at cash or a futures contract, what it did over a 5, 15, and 30-year period. But they're smart enough where they also let you decide, are you currently in a bull, bear, or neutral period? Because markets react different ways depending on, is the market currently in a bullish phase? Give you an example. What's the stock market? Anybody that out there that says it's bearish, little nuts. I'm not saying it's not going to top out at some point, but for 9 years it's been straight up basically, right? So if you're looking for the sell signals, the first thing I'd ask you is why? So you put down in a bull year what happens often. And you can refine this. That's the point. Does it mean it'll work? Here's the secret. I don't want anybody to hear. No. There are no guarantees. Past performance does not guarantee the future, but it is a tool. And I like tools. So when I'm looking at tools, this is one of them that I use. They give you good writings about complete reports, actually, as to what's going on. You get all this for 2 weeks, and it costs money after that if you want it. By giving us a call, 2-week free trial. You can go to our website. You'll be able to see a carousel of free offers. They're one of them. You can click up here at any point if you're watching me on YouTube. And underneath us, it says, click here for Ira's free offers on a number of websites. You got nothing to lose by taking a look at it, but be careful how you use it. I'm Ira Epstein. You have yourself a great day, and I'll see you tomorrow.